Tell me about the SPAC craze and where you see Oak Hill fitting in.
So it's a pretty extraordinary phenomenon, and it was obviously a market that a decade ago people wondered if it really was part of the institutional set of options to take a company public. There was a sense that the sponsor promoter might be getting too good a deal. Were they really adding value? Could you just take a company public? And I think in the last couple of years, that notion has changed, and I believe it's changed for the right reasons. I believe there have been SPAC teams, and like anything else, not all SPACs are the same. And I'll say with full disclosure, at Oak Hill, we are a strategic partner with Michael Klein at Churchill. And I believe that Michael has built a differentiated approach to doing SPACs. He's got a bench of 20 to 30 different CEOs, including Alan Mulally, Joe Ianniello, some of the largest names in the industry, Andrew Liveris, and the knowledge and the resources that he and we together can bring to help create value as part of an IPO process, and then more importantly, beyond, I think is pretty significant. Now, do I think that the air will come out of the bubble, as it started to in some spots, where people just raise a SPAC because they like the sponsor economics and they don't really have any differentiated strategy? The answer is yes. Those will ultimately fade away, but there's a lot of great executives backed with good, smart, thoughtful partners, and I think SPACs are here to stay. And I think for our firm, for what it's worth, I think there's an incredible opportunity, because I believe not only can we work with Churchill and in some cases some others to provide capital as part of the go public transaction. As you know, Churchill did a transaction with Multiplan, $11 billion deal, the largest deal of its time. And as part of that transaction, we at Oak Hill helped structure a $1.3 billion convertible debt piece of paper. We had followed Multiplan for a decade through a series of different private equity owners. And we believe that the opportunity to get a debt downside protection with optionality on a convert to the extent things work out the way we hope they will, gives us the opportunity to make a 15+% return with downside protection. So I think that being thoughtful about capital structures and SPACs is going to be very, very interesting. But long story short, I believe that SPACs can be an important part of the go public process. Some companies can tap the IPO market anytime, but then if their stock goes up 30, 40, 50%, was that better than doing a SPAC deal where there was less giveaway to the investor? So I like SPACs. You got to be differentiated. I also think there's co-investment opportunity for people like ourselves.